Top of the morning, top of the morning. Back at it again with another one. Ooh, microphone work with me. And today we're looking at the Nasdaq. It's Saturday. It's let me confirm the date. It's the 6th of September today. It was NFP yesterday. Numbers came out, they were quite atrocious. Um, but it was cool how the fundamentals came together with the technicals, and we were able to take a very beautiful and very nice trade yesterday. So I just want to speak more on that. Um, but before I go more further on to that, you'll check in the description. I'm gonna be doing a lot of other things, like besides the YouTube videos. The plan moving forward is to put the long form stuff, so like the explanations, the full in-depth shandies is gonna live here on YouTube, and then the more shorter, like you'll see in the description. You'll see in the description. Everything will be put up there, and also I have a very, 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 very dope partnership now that I'm gonna give y'all information on. Just stick around for that. But y'all are gonna love that, and I'll post more about it in the description. Be sure to check that out. But without going too far or too promo-y, you don't have to go in the description. By the way, use it, don't use it. That's up to you. But it will be very useful. Well, for myself, once upon a time. But Nasdaq, this is the daily chart on a weekly time frame. Let me start there. I first looked at it on the weekly, right? So analysis wise, I mark out like the previous week's high and the previous week's low, right? I look for setups in those areas there, back into the 50% range of the previous weekly candles range. So you can see this little squiggly line. You can see where the halfway point of like last week's weekly ranges. So now going into the following week, trading wise, I'll mark out that high and I'll mark out that low. And then, yeah, man, depending on what direction it's at in the range, like I'll trade accordingly. But that's just one of the liquidity pools I use to frame my trades, or where I look for my entry pattern. I look at previous week high and lows, previous day high and lows, I guess previous monthly high and lows, and also previous session high and lows. So I'll be looking at, or if I trade New York session, of course, but then at the beginning of New York session, I'll look out and see what happened during London session and what happened during Asian session. Did we just make layered lows? Did we purge anything? Things of that nature. That's what I'd look out for, and then I'll just anticipate that with the New York session. But now, weekly time frame, cool. I'm analyzing between NQ and ES. NQ can see it made a lower low, right, on the weekly time frame. Then ES, it made a higher low, right? So I was like, cool. Relative strength leaders ES, and when I saw that divergence on the weekly time frame between the lows, I had more confidence to say, cool. Um, we're not gonna purge those lows. So then I just kept building my thesis on top of that more and more and more, right? So then I saw the divergence. I then moved down to like a daily time frame. As I've mentioned, I've marked out the previous week's low and the previous week's high. I also mark out the halfway point of that range, since that's where I tend to target. Then looking at everything on the daily time frame, price was just starting to come up to hit this zone here. So as that was happening at the time when I took the trade, I was thinking to myself like, huh, this thing's probably gonna reverse and come into the midpoint of that range probably, because we already took out the lows. It was either gonna hit this and come back, or just continue straight up and hit that high there. I was expecting a continuation if the numbers came out good. I was expecting a retracement if the numbers were bad. I just didn't expect them to be as bad as they were because the job numbers came up to about. Let me just get you guys that information exactly. The numbers came out, the forecast was 75,000 and the numbers came up at 22,000. So that just goes to show the NFP numbers for the past, or this most recent one, those are quite bad, as you can see there, right? Also, shout out to Forex Factory. This is what I use for my news drivers on my red fold news days. That's when I obviously trade the silver bullet. On my days where there's maybe no red folded news or it's a medium impact news driver day, that's when I might then use macros if a setup presents itself. But that's that on that. But anyway, numbers were trash. I was then going into the trading session with that in mind, and I was like, cool, let me look for a reversal. I then saw price spool up, and I was thinking to myself, like, damn, the continuation is gonna happen. But I kept composure. I went down to a lower time frame, right? This is still part of my top down analysis. I didn't enter anything yet. So now, when I went down to a lower time frame, price was of course still shooting up, right? You can see this is before the 10 a.m. candle opened. So it's still shooting up, but I'm seeing like it's just been extending to the upsides and a lot of inefficiencies have been left. This area hasn't been retested as of yet. This previously bearish imbalance. Oh, oh, I got startled a bit there. There was just a strong breeze in the back. I thought the door was slamming open. Anyway, that was untested. It just shot up, and the way it looked overextended since it was, imagine it was like up there. It's just one thick ass candle, right? The way that was looking, and considering the fact that there was so many imbalances left, I was thinking to myself, there's no way it's not gonna reverse. I was like, there's no way it's not gonna reverse back into at least the midpoint of this range, of the weekly rate, of the previous week's range. Sorry, you see that? It lines up quite nicely actually. I was like, that's my target. So halfway point, that's where that area also was. I was like, that's my draw. And that was about 80% of the work done and dusted just like that. Just by figuring out the draw or where price is more likely to go and figuring out the appropriate liquidity pools, job is done. Next move now is just to go to a lower time frame and look for my entry pattern. Me personally, entry pattern wise, it's the 5 minute. This time around on this day, I did it on the 1 minute. Looking back at it, I'm glad I used a lower time frame because my usual 5 minute didn't really offer me the opportunity to enter because usually what I'd look to see is like maybe a sweep of liquidity, displacement to the downside, taking out in a bearish example, right? Displacement taking out a short term low, ret- um, while opening up a fair value gap, and then as it retraces back into that fair value gap, that's what enter, and then I'd write it down. But then that wasn't offered to me on the 5 minute. There were these fair value gaps that I was watching to invert. This one in particular, because I'll show you guys a screenshot. That's where my entry was, the initial one, or where the actual entry was. And then once we crossed that, that was my then the confirmation, you know? So I wasn't tripping. Also, I want you guys, this is a 15-minute chart, I believe. Yes. Okay, now we're on the 15-minute, right? You see these levels here. You see how price was like moving around and stuff like that just before hitting that previous week's high. It was looking sus. But at the same time, in a past life, before I knew what I knew now, I know that I should let the first 30 minutes of the trading day pass, uh, especially on red fold and news days, Because now, if I just looked at this setup here, like accumulation, manipulation, and then distribution, that would have been something else, you know? But like, that used to be something I look at, but I don't look at that anymore. I'd probably be looking at price to come back and like hit there. I'd put my stop there, something like that. You know what I'm saying? That's what I'd be looking at. But the news were bad, bearish, and it supported that. The structure made sense with the bearish news and the sell, as you can see, it was quite crazy, about 300 and some points, you know, and we were blessed to be involved in that. So struck of a liquidity pool, a very significant one. I'll go to the M1. Hopefully my markups are still there. Right, we're on the M1. Cool. Let me mark this out also because we are very much time based. Cool. So for me, I was looking at that macro or during macro time when the entry was made. It was between that 1010, I mean that 550 and 1010, right? Cool. So price is doing its thing, it's printing, it's printing. This is what did gave it away. I saw this divergence between ES and NQ on the 1 minute. That's what told me that A, we are about to go short now, or it's about to go bearish. I also studied how on the 1 minute time frame how price was reacting around this 5 minute in bullish fair value gap at the time. But then just seeing how it was printing, you can see the lower highs, lower highs. I was like, okay, it's about to sell off now. So I took the sell a bit early. I took it during the macro time. Usually I would have waited till from 10 a.m. Eastern Standard Time, but I took it in the macro, which was between 9:50 and 10:10. I was looking at a breaker this low here as price was coming back as it was hitting that low. That's what I was looking at. The fair value gap that developed after. But I took the short, had my stop loss above there, and then I targeted the low. It was the Asian session lows at the time. Let me show you this. Shout out. This is a dope indicator, by the way. If you need it, download it. You must read it. You know what I'm saying? But at the time, we were around about somewhere there, and I noticed. Okay, technically yes, from that spike from the NFP news release, we took out that the lows from London, but what still was there was this low from Asian session. So that's where my primary TP was, and it was in direction with that fair value gap there on the 4 hourly. So for me, it was a no-brainer to go short, and I did just that. You know what I'm saying? Took my 100 and some points very respectfully, and it was a very very beautiful session, a very beautiful trade because I had the bias. It was easy to identify. I had the fundamentals behind me, and it was a quick one, man. I don't even think I spent more than 30 minutes like holding the position. It didn't rock with my emotions back and forth, none of that. I put my order in. I had my take profit, my stop loss orders sorted, and then I closed MT5. I just opened it for quick screenshot before everything finished, but it was very controlled, very controlled. I'm super happy about that. The only thing or grievance that I have is that I didn't stick to my risk management strictly. I put up over just a little above over 1%. Um, I guess I was a bit confident, I suppose. My intuition knew, and I am, or I do have a good hit rate on NFP. And the price did react in a way that was predictable. Since, as you should know, by the NFP protocol, we see a two-stage price for delivery. Price will move in a fake direction as per the news release. You can see It sold off. Then the fake move was a buy, and then the true direction came later as a sell. So I had that in mind as well, also from like past examples and just knowing what I know. That's what I had in the back of my mind, and it paid off clearly, because you can see it just melted or just fell like butter, just fell. I had a runner on. I could have opened it up a bit more towards that fair value gap, but I wasn't trying to be greedy or nothing like that. Um, yeah, I was just trying to be content with enough, content with enough, and that was my NFP. I'm just gonna quickly go back to the Twitter. You can just peep the handle there, give us a follow. I'll just be posting like my trades, or like I'll journal. Actually, I'll journal my stuff here. So if you're interested in seeing what's popping, you know where to find me. So here I was just posting the comparisons on the weekly chart between, um you'll see by the pricing, the label isn't there, but by that's NQ, it's 23,000 whatever. ES is like 6 or 5,000 whatever, but yeah. So that's just the weekly charts. ES hit its previous weekly high prior to NQ. It was showing much more strength. You can just see by comparing the lows. NQ made a low low. ES was making a higher one, and it also is much beefier. You can see that. So you can see just before NQ struck it, that was the situation. Then on the daily time frame, you could see what I was saying. You know, I was interested in seeing it come back here. This is ES. That's NQ, right? As it was shooting up, and then it fell back down. I wanted to see it come to that level there, and this was before the news. You know what I'm saying? You could see that struck it. This is at 10:10. I was already in my short by here. I was just chilling, watching, you know, and then that's the result. And then you now know how the day ended. So it was cool to see, cool to anticipate it, and super cool to come up with a plan and to execute it flawlessly. And it was a good session, man. It was a good session. Thank God for the skill. But in summary, um, with NFP, I'll start with the protocol for those new people, because we get a lot of people coming in all the time, and they'll come in and something will be sounding like French, but like it's very simple, right? The protocol for NFP. This week it was a bit different since we had a bank holiday on Monday, right? What is that? We had the bank holiday on Monday, so this month's NFP protocol was a bit different. Bank holiday on Monday. Tuesday wasn't very fruitful, or it was a day that would be advisable to avoid, or more rather, the AM session. This is just from my point of view. I'm not saying this is absolutes. You'll collect the data on your own accord, but I'm just sharing my findings and what I'm currently sticking by, right? This is in the scenario where there's a bank holiday on Monday of that NFP week. No trades on Monday, of course. Tuesday, the next day after the bank holiday, try to skip the AM session, rather look at the afternoon session. Wednesday, calm day to look for something, especially just make sure you're done by the AM session on Wednesday. Thursday, mize that day altogether. By mize, I mean avoid. And then Friday, of course, dive in, but after the news has dropped. And after the news drops, it tends to be a two-stage news driver event. The first 30 minutes after the news drops, it will move in a fake direction. In this month's instance, it was moved up, right? It bought. You feel me? It bought hard. Okay, not that hard, but like it bought, right? First 30 minutes or so, it'll move in the fake direction, and then from there, it'll move in its actual direction. So you can see we accumulated, went up, and then we fell back down. So two-stage movement, it'll do that, and then just position yourself accordingly, especially taking into or with the context of if price strikes certain liquidity pools. In my instance, this past Friday or yesterday, I was looking at the previous week's high and look for my entry model to form after that price level has been hit. And then I looked for price to return back to the 50% range of the previous week's price range, which also lined up with a 4 hourly fair value gap that existed beneath price. Also, in the same breath with very weak NFP numbers. So the confluences were definitely in my favor, and as you can see, the recipe came together quite nicely, very much quite nicely. So thank God for the skill. That's my NFP, and yeah, man, more to follow, more to follow, more to follow, more to follow.